All right. It is a great day in South Florida. Welcome to Living in South Florida. My name is Chris Igoe, and today we are going to address the main topic that's on everyone's mind right now. So today is Wednesday, and what is the date here? It's Wednesday the 15th, and the Fed just announced that they are raising their benchmark interest rate by 0.75 of a point. And if you've been watching the channel for a while, you know that I've been talking about this and hoped that this is exactly what they would do. Now, what does that mean? How does that impact you if you're looking to buy or sell real estate here in South Florida? Is it going to put a squeeze on you? What does it mean? What is the impact going to mean on the markets and the economy overall? So I'm going to do a deep dive on that. If that's what you want to learn more about, then please keep watching, and we'll get into it right now. Boom, we're live. Okay, so I'm going to go back a minute here, and I've done lots of content recently as to what the local market dynamics are, the shift that we've seen, the pivot that we've seen as it relates to inventory starting to uptick a little bit, and some of the demand starting to downtick a little bit. Now, make no mistake, it is still a seller's market. Seller's market being defined by 6 months of inventory or less, and buyer's market the opposite, 6 months of inventory or more. Now, for the last year, we've had, and again, there are markets. There's the overall market, and there are markets within markets. So the temperature and the intensity of markets are going to vary all over the place, throughout Florida, throughout the country, throughout South Palm Beach County, Broward. I mean, there are so many different markets that exist within the grand scheme of things. But that being said, the dynamics have been such that there's been very little inventory. In most places, like where I live in Canyon Trails, there's been a few weeks of inventory, period. And with interest rates as favorable as they have been, there has been insane demand. And, you know, it looked like multiple offers competing, bidding the price higher, doing whatever it takes to get the house under contract and outbid the other guy. And that has been horribly frustrating for our clients, but we've still had tremendous success given those dynamics, getting them what they want, but it's just been horribly competitive. That being said, the sellers have been a little bit spoiled. They have gotten exactly what they want on the terms, and whatever they want is what they were going to get. And we're starting to see that those dynamics change a little bit here. Now, I have to be very clear. The market here in South Florida is very different than other markets. And the markets within the markets can be even more dynamic than that. But I share that information because I still believe, and I know it to be factually true, that there is no more land here for development. There is no more, there's no place to build. And there is tremendous demand to live here in South Florida for all the reasons that everybody wants to live in South Florida. The weather, the lack of state income tax, the asset protection, on and on and on. And I'm not going to go into that video. If you want to see what the pros and cons of living in Florida are, then you can check out the playlist, which will be up here in the corner. And separate to that, if you're thinking about moving to or living in South Florida and you're unfamiliar with different areas, then please check out the playlist, because it is very likely that I've built out content in any area that you're thinking about moving to, so that you can get the most comprehensive feel of what it's like to live there. But okay, let's get back to the market dynamics. So the Fed just hiked interest rates by 0.75 of a point. The stock market's been getting decimated for a while now, right? Across every market. So every market's been getting shellacked. Every asset class is getting shellacked. Real estate here in South Florida has not been adversely impacted by that as of yet. Just hasn't happened. And I don't suspect it's going to be as susceptible to a decrease as other places in the country are. In fact, Lotus Palm, which is the new community that's being built out in West Boca Raton, increased their price for a home, and they haven't even started. They haven't even opened up the registration to be part of the lottery to be able to buy a home. But they increased it from 1.2 million in Lotus. The new construction in Lotus Palm will start at 1.3, and it'll go up to close to 3 million, which is an increase. And it's because there is no land. So they have a premier product, a luxury product, and there is still a tremendous appetite for that. However, let's talk about what the dynamics of the market are. So the interest rate, Fed did something they haven't done in 28 years. This is the biggest rate hike they've done in 28 years. They're trying to get control of inflation. I'm going to go on the record right now and tell you it's not enough. We're going to see more rate hikes, and we're going to see, I'm talking about Fed rate hikes. They're going to increase that number, and that is going to have an impact on what it costs to borrow money and for you to get a mortgage. So let's play the mortgage game right now to provide some context as to what has happened in the last few months. It was only a few months ago that you could get an interest, you could get a mortgage at 3.5%. It seems like forever ago, but it wasn't that long ago. It was a matter of months. Well, if you look at the average sales price for a home in South Palm Beach County, and this is a lagging number, this is April's number, this is the most recent stat that I have. But if you go back to April, what you'll find is that the average sales price for a home in South Palm Beach County was $1,022,000. Okay, that's the number. That's the average sales price. Okay, so if you're a cash buyer, congratulations, that's awesome. But if you're using financing to go out there and get a loan and use some leverage and buy a house at 3.5%, here's what it looks like. Your monthly payment is just under $3,600. Over the 30-year term, you're paying out, let's call it $490,000 in interest. That was 3.5%. That was historically low. That was a massive win if you were able to do that at 3.5%. Well, not everybody was able to, and a lot of people were on the fence waiting to time the market, get a lower interest rate, or do a whole bunch of different things that did not lead them to living their best life and maxing out South Florida, living to the fullest, because they were on the fence. Okay, well, now what does the market look like? Well, as of today, a 30-year fixed term interest rate is 6.23%. From 3.5%, that is a fast, tremendously fast interest rate hike that is going to hit interest rate sensitive buyers right in the purse, right in the pocketbook, right in the wallet. It's going to hurt. And what does that look like? Now, mind you, it's still historically low. This is more like what the 90s looked like in terms of interest rates. But okay, at 6.23%, up from 3.5%, your monthly payment is now, this is assuming you put down 20%, but your monthly payment is just under $5,000. It's $4,900, which is $1,328 more per month than the 3.5% rate. It's $967,000 more in total in interest, which is almost $480,000 more in interest than you'd be paying at 3.5%. So that's a lot more interest. This is going to have a major impact on people and the amount of home that they can afford to buy. Okay, well, that's at 6.23%, which is where it's at right now. What happens when the interest rate is 9% or 10% or 15%? Because I got news for you. That's what's coming. No doubt. That is absolutely what's coming. But let's just put this in, and I don't care what all the other stuff says there's so much misinformation out there, and optimistic. I don't know, I don't want to call it cautiously optimistic. I would say I think there's too much hopium that's built out in a lot of the press that I see out there as it relates to interest rates, because analysts were calling for the most that it could possibly be this year was, and I think I've seen so many different articles recently that I'm probably going to get this wrong. But at the beginning of the year, I believe that analysts were calling a top rate of being somewhere near 5.25%, 5.5%. It may have been as low as 5. Well, guess what? Those analysts are dead wrong. We're at 6.23%. Here's what I think you're likely to see by year's end. 9%. Period. End of story. It is what it is. Well, let's do the same math, assuming that the average sales price in South Palm Beach County remains $1,022,000. And I actually think that's going to continue to increase at a more moderate pace. But we'll just use that for the example. We'll just use $1 million, not $1,022,000, $1 million. Okay, great. So your average sales price in South Palm Beach County is $1 million. Great. At 9%, you're paying $64.36 per month. Again, compared to 3.5%, which was $35.81. And what does that mean? It means you're paying $28.55 more per month. It means you're paying $34,000 more per year. And over the life of the loan, you're paying $1 million more in interest. Period. That's the difference between 3.5% and 9%. And it sucks. So what impact is that going to have on you if you are looking to buy a home right now? Well, it likely means if you have sensitivity to interest rates, you're in a bind, period. Okay, well, people who need to buy and sell will buy and sell. People who want to be in Florida because they want to be in Florida will make it happen because they want to, for whatever those reasons are, right? It is what it is, and these numbers are more in line with some historical averages that we've seen in the past, back in the 90s, right, or the 2000s. We're not in uncharted territories. Although we are at the end of the road. We're at the end of the road with interest rates. No, actually, we're not at the end of the road. We got more rate hikes coming. But what does that mean to you, right? So it means you can afford less home. If you're a cash buyer, great. What I think we're going to see now is, and I took some notes here, so we're going to see what I expect to see as the market dynamics continue to change. And when I talk about market dynamics, I'm now taking off my realtor hat. I told you what it looks like from an interest rate perspective and affordability if you're looking to buy a home at these new interest rates and these increased interest rates. But let's talk about the market psychology and the rest of the market. So the stock market. Okay, when the stock market crashes, and I can speak from experience having been a stockbroker through the financial crisis, when there is real fear in the market, when the market is just getting eviscerated, what we've seen so far is a correction. What we've seen so far is we're crossing into the territory of bear market as of yesterday. When you see stocks get halted and you see systemic fear, and the fear being based around, are we going to face a liquidity crisis? Is there going to be a run on the banks? Those were real fears back in the financial crisis. And the government did all kinds of things to inject liquidity and to avoid that decimation. But that's what was going on. The Fed broke a buck, the money market interest rates broke a buck. There was tremendous fear, tremendous selling, and people who were out there who thought they had money and thought they had a high net worth that were getting just whacked all over the place realized that they had real market risk. And I watched high net worth individuals, accredited investors that I worked with, get wiped out. It happens all the time. No harm, no fault of mine or anybody else's. It's just that's what happens when the market gets decimated. And we're starting to see those things happen. So when you see Amazon talking about layoffs and Walmart talking about oversupply, over inventory, and layoffs to adjust their business accordingly and stay in business. But when you see Walmart, Target, Amazon, and a host of others talk about we've got to lay off people in order to sustain the viability of the company, those are leading indicators. And when those layoffs start to happen and people start losing their jobs, and the margin calls come in, and the fear comes in, and the panic comes in, and people have to make hard choices around what they can actually afford, like should they feed their family or make their home payment. Where are they going to get the money from if they haven't had a wage increase or a raise period, and interest rates are through the roof, and inflation is through the roof, and the cost of living is through the roof? What's the first thing to go? The asset that they have equity in. And Ray Dalio is out there. He talks about debt equals equity. He's right. That's what's going to happen. And although most homeowners do have a tremendous amount of equity right now, when they are in a real financial bind, the first thing that they can do to alleviate that problem is sell their house. And that's what's going to happen. So you're going to see a lot of people that are out there that are on the fringe of being able to live the lifestyle that they are probably over leveraged in anyway. They're going to sell and get cash so they can live. And so how does that impact you? If you're a buyer, it means you probably have more options. If you're a buyer, this is exactly what you were looking for, because you're going to start to see a lot more inventory hit the market, and the reality bubble, or the perception versus the reality bubble, get burst on the seller side. So for the last several months, last year, but certainly with, back, what are we in now? We're in June. Back in February, March, April, it was so white hot intense in the market on the seller side that they just had total dominance and could do whatever they wanted. Pick your number. You're going to have multiple buyers. They're going to bid the price higher. You're going to set records. All those things are going to happen. They had all the leverage. That's not the case today. There have been more listings in the canyons where I live in the last week than I've seen in a long time. And I'm watching a lot of these sellers, and I've consulted with a lot of these homeowners. They're going out there and they're overpricing their homes because they don't realize that the market has shifted. They don't realize that the dynamics have changed. They don't realize that they no longer have the leverage that they used to have. Now, they still have tons of equity, and if they were to price their home the right way, it would absolutely sell, and they would cash out and they'd get what they wanted. But the irrational exuberance that once existed, it's not there today. The market has changed. Interest rates have changed. The Fed signaling the Fed doing the 75-point basis hike is signaling what's going to happen in the future, although they're not going to come out there and say that, although there's a news conference happening now. I think this is going to be just the tip of the iceberg as it relates to interest rate hikes moving forward. And where do you want to be if you are thinking about selling? You want to max out the opportunity now. You want to get in front of all of this bad economic news, which is absolutely coming. I mean, it's obvious that it's coming. You want to get in front of that. You want to be the first one out there where there's the least amount of competition so that you can get what you want. And if you wait, you will be punished. The market will punish, because that's what the market does. And the market's always right. The market doesn't care what I think. It doesn't care what you think. It doesn't care what anybody thinks. It's always right. So I share all that not to scare anybody, and not to, the last thing that anybody should ever do is panic. But you should be prudent, and you should be aware of what the dynamics are. And there's a lot of misinformation out there. I've got realtor organizations that I get newsletters from that are pumping this narrative that that recession does not equal housing crisis. And only 2 of the last 6 recessions actually showed home value decreases. Yeah, that's true, because you're only going back to 1980 in that analysis. But also, the 19% or the 20% hit that we took back in the financial crisis was propped up by the government, and they don't have any more powder dry. They can't do anything to bail us out anymore. The too big to fail that got kicked down, the can that got kicked down the road, well, we ran out of, just like I ran out of road on this trip, well, so has the government, and so has everybody else. We are now in a scenario where you must do what's right for you now and make hay while the sun's shining. So I don't think the next recession looks anything like what the last recession looked like. I think it looks a hell of a lot worse. And if the government starts printing more money and doing all kinds of other crazy things, which I pray to God doesn't happen, then we're probably looking at a scenario that is not a recession, it's a depression, or much worse, it's hyperinflation, and you might as well call the United States Argentina at that point, because it's no bueno. No bueno. Now, I don't think those things are going to happen, but they could. And in the interim, what are we doing? We're going to continue to tell it like it is. So right now, it is still a seller's market. Right now, there is not as much demand from buyers that like there was a few months ago. Doesn't mean there's not demand. There's plenty of demand. Doesn't mean that the housing values are going to fall out of bed. I don't believe that's going to happen. But I do know that those things will happen in other markets. And when they happen in other markets, then it starts to get really scary out there, and people who are on the fringe will hit the market and list to preserve their equity and cash out. That's what's going to happen. So I hope all that made sense. I went on a rant here, but that's what's going on. If you're even thinking about moving to or living in South Florida, you've got to give me a call. If you've got any questions, leave them in the comments down below, and I will answer them as soon as I possibly can. Don't be afraid of the boogeyman, because there is no boogeyman, but be aware of what's going on in the market. Empower yourself with the best information that you can get access to. I will always continue to shoot from the hip and tell you the truth. And if there's ever anything that we can do to help to serve and support you, your family, your business in any way, shape, or form, then please call, text, DM, send a carrier pigeon, a smoke signal, by any means necessary, because we've got your back when it comes to moving to or living in South Florida. And until next time, peace.